Good morning, traders. This is Perry Wookie with StartupTrading.com. It's 9 minutes till 9 a.m. Eastern Time on Tuesday, September something, 24th. So as we look back at yesterday's session, right, and we have just, the title of my video is 3-day bonds. We have just been treading water up here in this area, going a little bit below value from the previous days and just going sideways, going a little bit above the value from the previous days and just going sideways. So for the Russell, it was a little bit below and just going sideways. For the other index, it was just value area high and up, just going sideways, just taking fills. If we look at what that did to the structure for that we're going to be watching today, basically all we have right now is these single prints on the Russell, and that's just going to help judge the day really for the Russell itself. And but if you look at the other value areas, they're very small and tight. So but normally when we're watching this, we're thinking, you get above that, you get below it, you got, something might be going on, blah 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 blah. But really, you need to just go back and look at the last 3 days. In my opinion, we'll get into that in a minute, and then because these value areas from yesterday's don't really mean diddly squat. Uh, in my opinion. So as we look at where we're at, we are in the overbought end of the spectrum. It doesn't mean we can't keep going higher, but it means that we're maybe a little long in the tooth uh, for the everything except for the Russell is on that leaning overbought, and it just means that basically we're running on 3 month highs is all that means, and it's hard to be at the top of the last 60 trading days and 60 to 65 trading days, and just keep pushing. You can, but usually there's a you'd rather buy something that's not at the high for the last 3 months or not near the all-time highs. So it just means we could be a little two-sided if nothing else. And if we look at what's on deck for today for news, is some more Fed head speakers. You got consumer confidence at 10 o'clock. Uh, but just a slow tape day, really nothing going on there. And then again, for the week, you got a little bit of, final GDP. It's not the initial uh, we got a little bit of news Thursday morning. You got three different things coming out: final GDP, unemployment claims, durable good orders. So the combination of all those could, have an effect on the tape. But then Thursday at 9:20, Powell's going to be on the tape. I don't think this is going to be anything. But just because of what time of day it is, you should probably sit on your hands. Uh, but it's a pre-recorded video. Do you think that he doesn't, if he's taking time, I don't know how many takes it took him, but uh, every single word in this is going to be precisely picked so no one gets off tangent. And then it's probably going to be as mundane and as bland as it could be while still, achieving the objective for whatever he's doing opening remarks for. Um, then Yellen's going to be on the tape. I don't think this is going to be anything either because it, Yellen's going to be talking about the treasuries at a treasury conference. You should know, and this is going to be for Thursday. So we still got 2 more days before this is coming up for either one of those. But again, unless she says something totally off the wall that makes the treasury market scream higher or lower, which then would have the inverse effect on the or effect on the markets. Nothing's going there. But the big news for the week, my long drawn out, going through all this news, is Friday at 8:30. That's the biggest news print of the week. And until then, right, we can. The market doesn't have to do anything. It can if it wants to, but it doesn't have to. So if we look at positioning for today, uh, 484 is has the biggest calls. 482 has the biggest near term uh, puts, and then if you go down, you have to go. You're talking about 400 points down from, basically where we are now, you get down to 473. That's where the biggest puts are for the day. Probably that is not on the table unless the VIX is just skyrocketing. But if the VIX does start skyrocketing and we get a move lower, that's probably what's on the table uh, at the close. So I don't look for that to happen though. And then as we look at the other indexes, the SPY is currently trading uh, 570. 570 is the largest gamma for today on the call side. And then if we can stay above 570, you could slide all the way up to 575, right? 50 points on the ES. And then if we don't hold above that, you really probably just a slow trickle down. And then you probably just still come back up and close at least at 469. So, uh, you know, nothing for Nadex there, I guess is what I'm saying. And then if we look at the cash market, the cash closed yesterday at 57.18 half basically. Futures are up 5, so it'll be about 57.25 is where we're at right now. We're right in between these levels, so you know that could be all we're looking at for today. You got 5,700 should be the floor, right? So that'd be about 25 handles under where we are for the ES. And then to the upside is just for the weekly, nothing for today. 57.50 is going to be your first bump off. So not a lot going on with positioning. And as we look at the continuous contract here, 57.76 quarter is your point of control from yesterday. On some weakness, I think it would be pretty easy to double check this 57.54, and then you have to see what happens, right? If the VIX starts accelerating higher, you could get down to 5,700 on the futures. Otherwise, you're just sitting here still just treading water. And if you look at the last three, right, we had this spike up last Thursday, right? And then we've just set up here on these highs uh, for 3 days. So as we're sitting here uh, looking at those highs, we'll just have to, watch and see what goes on here. Uh, there's the on the one time frame. This is what I'm watching. The NQ really needs to get and make traction above 20,251. To the upside, and to the downside, it really needs to start getting traction below 11,900. For the ES, it needs to get traction above 57.85. We're trading 82, so if not, it needs to get traction below 57.25, and then see what happens. But look at all the support over here for the ES. Uh, from all the way down from 57.25 to 56.75. That 50-point range here is really what you're looking at for true support until proven otherwise. And you get under that, then you can get a more of a rapid flush uh, down, and that's when the VIX will be skyrocketing. That's going to probably be extremely difficult to do this week before Friday, anyways. So looking at the overnight session, 30 points basically for the ES. If you look, we're just sitting here treading water and building time and volume basically above yesterday's value area so far. We had that one check down into value in the overnight session, so that's your overnight low is uh, just think of it this way, slightly below the overnight low is value area low, and that's where you could get into, potential support again. If you just look left on the chart here, I'll zoom it up there, you can see after we hit that push up Thursday, and we'll even turn on the extended so it makes it a little bit, or show the different highlights here, but you can see that most of the bodies of these candles, that would be your time TPOs, uh, there's not too many of them that are below yesterday's low. And if we go back the other way, there's not too many of them above yesterday's high. So that's the battle zone. So between yesterday's high and low is basically the crux of all the trading that we've had in the last three sessions, because this push up for the ES, right? All the bell time was spent on this higher area. The move took place overnight. So as we look back, at the indexes, the Russell's trying to gain traction above the other side, but you can see how many times it's say, we should go higher, we should go lower. So it's basically just whitewashing this area out and getting fills back in here and not really doing anything. The Dow's above yesterday's high. The ES is pushing up and trying to get back above yesterday's high, and so is the Nasdaq. So watch value and look at the settlements. The settlements for the Dow and the ES are right at the value area high. For the Nasdaq, it's slightly below that. And then just think about 20,075. That's your point of control from yesterday. So above or below there for the Nasdaq after things get going will lead you. Do you bounce back out of value or do you get stuck back in it? So anytime you open above or below value, you should ask yourself. There has to be a probability or a chance that you get an 80% rule during the day. Uh, and at this point in time, it would be to the downside. So that is this stuff just traded yesterday. There's no reason it can't trade again today. It doesn't have to, but if you start getting into value, you're probably gonna just get a quick spike down, similar to what you had last night. And keep, just watch. If you see these candle bodies, right? You don't see any other bodies or any other prints that are below value. So a lot of people that aren't watching value, right? This could be a trap if you come back down around this area one more time that you're not getting this overnight low, right? You might not even get past the gap fill in this POC. Uh, a lot of people that aren't watching time and volume and values aren't going to realize that, there's nothing going on below value area high in this session. So that's really where your break point is, but it doesn't mean that if you break into there that you are going to get down that 80% roll. Remember that 20% of the time it doesn't work. So there's your markers, the settlement, the POC, and then it could be potentially the value area low. And then getting below value would just be a complete flush, and maybe we could get, a deeper pullback. But keep in mind, because there's nothing going on until Friday, on any weakness at any time, institutions are going to want to sell the VIX. If the VIX spikes up, they're going to want to smash it. They're going to want to take that easy money because there's nothing going on until Friday. The only caveat to that is we had the big OPEX on Friday. Earnings do not start until, like October 11th. So that's still 2.5 weeks away or whatever. Uh, this is the time that if you are going to get a serious pullback, the window is open for it, but it doesn't mean you're going to get it. And you're going to have to break this 3-day balance to the downside before you get it. So don't put your carts in front of the horse, right? Don't be expecting that you're going to break down and go under because more times than not, coming into earnings, and again, we still have 2.5 weeks, that there is a lift up into earnings. Just because of all the speculation, like wow, this company's going to do good. I'm going to buy some calls for it, and that ends up pushing the market higher. So if we are going to get a much bigger pullback, which you can get in September, we have to break the 3-day balance low first, and you don't need to, plan on that. That's what's going to happen, and there'll be plenty of times to get in the trade to the downside if that's what sets up. Otherwise, we're just still in this balance, and you should expect that volatility is going to be sold. There's going to be mean reversion. It doesn't mean we can't trickle slightly lower, but it means it's going to be more difficult if every time the VIX rises and the market drops a little bit, that the major institutions are just, selling the VIX and buying the market because that's probably what's going to happen between now and Friday. Long-winded. I hope this helps. You guys have a great day, and we'll talk to you tomorrow.